Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea, my theme into the end of the year and probably dazzled into 2025 is this great bull market. I'm not making an opinion on buy, hold, sell, but I'm just saying we're observing, whether you're in the game or not, this great bull market. The booking team has been phenomenal about getting in a cross-section of opinions, and today was glorious. Of equity strategist Jason Trenner joins us from Strategas Research, and Gino Martin-Adams joined us on short notice with reaffirming our earnings growth for next year. But you really get some nuances when you listen to 4, 5, 6 frontline equity strategists. I note from a couple days ago, Brian Belsky of BMO Capital Markets saying, look, everybody gets it's a cyclical bull market, but he feels there's a structural underpinning to it. Of course, he's been a bull and on board. No one I know has been more of a bull on board than Benjamin Laidler. He was at HSBC, and on Christmas Eve of 2018, he said, you must climb on board this cratered market. Nobody caught this great bull market like Ben Laidler. Here, Ben Laidler of Bradesco BBI, forward.
We need to treat it with some respect. Momentum is the most powerful factor historically, in markets. We've seen this extension of this U.S. economic and market exceptionalism. We're in a period of very strong seasonality. So I think we need to respect it. But again, I wouldn't fear it, because I do think it's going to be fundamentally backed up by the earnings continuing to come through and deliver. If that wasn't the case, I'd be, pretty worried here, because valuations are high. We've repriced down to 3 Fed cuts. But I think, the fundamentals of this bull market are the earnings are going to keep delivering.
Ben Laidler, constructive and made very clear the free cash flow story for the Mag 7 are tangible. Another equity voice joined us today, Alicia Levine at BNY. All of these people are different, and you learn their nuances, their academic pedigree, where they've worked, all the different theories that are out there. No one has a mathematical construct in the equity markets like Alicia Levine. Maybe the only one in fixed income close is Jim Caron over at Morgan Stanley with his physics background. Alicia Levine at BNY is bulletproof on the math, the Euclidean space, the three-dimensional space of equity analysis. Here she is.
The profit is better. Let's go back to the late 90s. Starting in the late 90s, you saw a steady increase in the operating margins of the S&P, which created a higher multiple regime for the S&P. If you just go back in time and you get your average of 16 times forward earnings, well, your margins were also 9 and 10%. Now we're looking at 13.5% for next year, and that's because it's being driven by the cash flow of tech. And so companies are healthier. It's not just earnings, it's free cash flow margins are better. It's keeping the multiples higher. You've got a healthier market. And the pricing of tech compared to the rest of the market on a relative basis is actually lower than it was in 2021, 1999, and other periods where there was a tech boom or a technology change where the market got excited about a technology change. So it's relatively less expensive given free cash flow margins and earnings.
Alicia Levine of BNY. We'll continue this trend into the new year, looking at the equity markets, all different opinions. Quite frankly, a set of people rather cautious, not gloomy, but just rather cautious in this great bull market. On your morning commute on Apple CarPlay, got the numbers yesterday for Apple CarPlay. Thank you so much for your commitment to that new technology. Android Auto as well. Good morning on Sirius XM channel 121 and on the corridor here on the East Coast from 99.1 FM in Washington up to 92.9 FM Boston, as far north as Mount Katahdin and Millinocket. Don't forget, we're on YouTube. Subscribe to Bloomberg Podcasts and on YouTube Podcasts. This is Single Best Idea.